The major U.S. stock market indices getting crushed down around 4% today alone. Investors are wondering what the heck is going on. Well, folks, just last week I made a video saying, look, prepare now. Expect to see new lows. You saw the new lows today. So investors are wondering, oh my goodness, like what's going on? This video, I want to answer 3 different questions. 1, why are U.S. assets continuing to come under pressure? Number 2, how much further downside do I think there is looking at risk assets, particularly the U.S. stock market? What's the downside? What's on the table for the downside risks? Number 3, how am I personally investing in this increasingly risky environment? Now, you might joke to yourself saying, well, wait a second, as stock prices go lower, shouldn't it be less risky? And yeah, I actually agree with that sentiment. That said, it's still broadly a very risky environment because of the aspects that I'm going to talk about in this video. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing, a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. Let's dive in to understand, well, what's going on here? Well, folks, last week I did a video calling out inflation is red hot, around 9%, 40-year high, sentiment is getting crushed. And the reason why this is important is as inflation moves higher, expect Wall Street to get increasingly nervous that the Federal Reserve is going to have to raise rates more aggressively. And as the Federal Reserve tightens more aggressively, that really puts the screws to the economy. That makes it more costly to do business. Greater transaction costs, interest rates move higher, the cost of borrowing moves higher. So as you see that pressure, you start worrying, oh my goodness, will you start seeing a recession? Is it possible the Federal Reserve overshoots? So there's a couple of key lessons that I want you to consider as you're looking at this right now. There's a couple of key takeaways. First of all, liquidity moves markets. That's a key lesson to consider. You know, when liquidity is getting pumped in, lots of cash, lots of quantitative easing, you see Matt Damon say, hey, you know, be brave, be a crypto investor. That is what you see when you see tons of liquidity moving. You know, lots of liquidity moving into the markets. When liquidity is getting pulled out, that's when you see asset prices come under pressure. I'm personally still waiting for the Ben Affleck commercial of, hey, what do you do when you have a margin call? Maybe that'll happen in the coming weeks and months. We'll see. I'd say that's, you know, maybe opposites, the Matt Damon versus Ben Affleck aspect here. I'm very curious to see when that commercial airs. But personally, I'm looking at this saying, that's the key concern, liquidity. And the Federal Reserve is going to, they have a choice of either acting aggressively or acting very aggressively. And Wall Street hates that uncertainty of how aggressive will the Federal Reserve have to be from here. The second key lesson that I want you to take away from watching this video is that no one knows exactly how things play out because it depends on leadership. In this case, it depends on the leadership of Federal Reserve Chair Jerome Powell. How aggressive does he want to tackle inflation? Because of his takeaway from red hot inflation is, we'll just keep doing our 0.5% and we'll be okay. There's a good chance that you see risk assets rally into this later this week. There's a possibility that happens if the Fed says that. But if you see language closer to like, oh my goodness, we need to act more aggressively, inflation is just simply unacceptable, risk assets could completely crap the bed. That is what you could see continue to happen. And that part of my concern here, and part of the reason why I'm not saying go buy, is, you know, I'll talk about the valuations in just a second. But part of it is that you have not seen a disorderly sell-off process. This has been very orderly so far. The disorderly, oh, it's down 5%. Oh my goodness, it's down 15% today. That's what you see closer to a capitulation. We are not there yet, I would argue, looking at this from here. So then the next question is, well, folks, how crazy does it get? I mean, how low does the stock market go from here? And here's my takeaway. Let's look at the S&P 500. Currently trades around 20 times trailing earnings. Around 500 businesses, 500, you know, S&P 500. So if you think of it as 500 businesses that have grown earnings at around 6 to 7% per year on a per share basis, let's say over the last decade or since the last economic peak, and you're paying out a little under 2% dividend yield, that's not really crazy compelling. If you were to ask a bunch of investors, well, how much are you willing to pay for that? Right now, the market's saying 20 times. It's very possible. If you do a survey and don't say it's the S&P 500, and you say, own this business with these parameters, people might say 25 times, people might say 15 times. It depends on liquidity, that point I was mentioning earlier. if you have liquidity getting pulled out of the system, and the Federal Reserve is doing it in spades with both higher interest rates as well as quantitative tightening, which is to the tune of tens of billions of dollars a month getting pulled out of the system, you could see that earnings multiple for the S&P 500 drop to 15 times, maybe even low teens. So it would not surprise me at all to see the S&P 500 down a further 20 to 30% from here. Once again, depends on leadership. That's the key takeaway that I want you to remember from this video, along with that liquidity moves markets. So I think looking at this, how crazy can it get? A lot depends on how aggressive does the Federal Reserve want to be. What am I personally doing? First, a quick plug where if you're looking to take charge of your investment journey, consider unrivaledinvesting.com, where you'll get actionable insights on unrivaled companies. We also have a community of fellow investors that you can learn and share with. This community includes a wide range of folks, whether or not you're students, just learning about investing for the first time, or you're a billion-dollar hedge fund manager. I have, customers of all shapes and sizes at unrivaledinvesting.com, and I've tried to keep the price point as affordable as possible to make the tent as big as possible for folks to learn about companies. I also share my personal investment journey for those interested. So what am I doing? How am I personally investing in this environment, what I view as a risky environment, as effectively liquidity is getting pulled out? The first thing is that stocks still aren't dirt cheap. I'm not seeing crazy bargains. So when I see something dirt cheap, that is when I'll want to buy. But broadly, I'm not seeing a lot of these crazy bargains. Number two is that I do have significant hedges in place, to the point that actually with this 4% drop today, my portfolio, the portfolio I call out to my Unrivaled Investing subscribers, was actually up. I like the hedges right now because it provides optionality to buy even more at bargain prices if the market continues to sell off. Now, look, hedging's not for everybody. I talk more about it in exclusive educational videos at unrivaledinvesting.com. So that's for the folks that are interested in learning more about that. I also, for the folks that don't want to do hedging, and I totally respect that, it's, in many cases, it's trading agony for money. That's what hedging is like. For the folks that don't want to do that, I personally, and keep in mind, none of this is investment advice, but what I'm personally doing is I still have a large cash allocation. Because, once again, when I deploy my capital, I want to put it in incredible bargains. I want to buy great long-term compounders, companies that I think can easily grow earnings 10, 15% plus a year, and buying it at cheap multiples of free cash flow. That's what I want. Now, maybe I'm asking for a little too much. Maybe I'm trying to be a little too greedy here, but at the prices that I'm seeing right now, I'm not seeing it. And if you feel like you're seeing those great earnings compounders and you want to call it out and spell it out in a video below, in a comment below in this video, I will read those. I will read your comments. I will respond to them. And if it's that compelling, I'll make a video about it. And heck, maybe I'll even buy it for myself. So that's why leave a comment below. I would love to hear about the great companies you own. But for the most part, a lot of the companies that I hear about are like, oh yeah, Matt Damon recommended this stock or this asset, and I think it looks cool. No. Do fundamental analysis. Is this a great company? What's its value proposition? Is it unrivaled? Are they profitable? Are they growing? Why are they taking market share? Those are the types of questions I want to answer, and I try to answer with my Unrivaled Investing subscribers each week with the companies that I call out, every month, calling out many different companies each month. So if this video has been helpful for you, understanding, one, why U.S. stocks continue to come under pressure, two, why I actually expect them to continue to come under pressure in the quarters ahead, and three, how I'm personally investing. If this has all been helpful for you, please make a point of hitting that thumbs up, hit that subscribe button. Thank you so much for tuning in.